Welcome to the deep dive. We're here to take, a big stack of information and really distill it down into insights you can use. Today, we're plunging into a topic that's frankly been doing more than just making waves. It feels like it's reshaping parts of the digital world. Solana, you've pulled together a really comprehensive set of articles, reports, and analyses on this blockchain. Our mission today, cut through that noise, get you the essential facts, and figure out why this technology, despite some bumps in the road, is grabbing so much attention and, frankly, capital. Is Solana just another crypto contender, or is something more fundamental happening here?
That's a great way to frame it, because Solana really is more than just, another name in the crypto space. It's a high-performance blockchain platform, and it has this unique technical approach. It's really designed for scale. We'll dig into its core tech, its growing ecosystem, how you can actually interact with it, and the challenges it's faced and how it seems to be evolving. Get ready for, I think, some genuine aha moments.
Yeah.
There's a lot of depth here. Definitely goes beyond the headlines.
Okay, let's start there then. For anyone trying to get a handle on Solana, what exactly is it at its core? What makes it stand out in this pretty crowded blockchain field?
Right. So at its heart, Solana is a public blockchain. It does smart contracts. Its native crypto is SOL. What's really different is the architecture. It uses proof of stake, like many others, for security, but combines that with something called proof of history, or POH. Now, POH isn't exactly a consensus mechanism itself. Think of it more like a super fast cryptographic clock. It creates this verifiable sequence of events before they even hit a block.
A clock, so it orders things first. How does that help?
Exactly. That pre-ordering lets validators process transactions much, much faster and kind of in parallel. That's really the secret sauce behind Solana's speed. Currently, it averages around, 1,128 transactions per second, with a theoretical max way up at 65,000 TPS.
Wow, okay. That focus on speed is definitely noticeable. We always hear it compared to Ethereum. Given that unique design, where does Solana really sit compared to, say, a giant like Ethereum? Is it trying to replace it, or is it like carving out its own space?
Yeah, it gets called an alternative, but it's maybe more nuanced. Solana Labs' Anatoly Yakovenko and Raj Gokul founded it back in 2018, launched in 2020. They specifically designed it to tackle the scaling problems that, older blockchains like early Ethereum had. Research in 2024 definitely pointed to Solana's higher scalability compared to a lot of existing tech. So it handles smart contracts, dApps, just like Ethereum, but it uses a totally different philosophy, aiming for really high throughput and super low costs. That makes it attractive for things that just need crazy fast transactions.
Okay, that makes sense. Now, something that catches a lot of people's eye is passive income. How does Solana staking work? What's the appeal there?
Right, staking. Basically, you lock up your SOL in a crypto wallet, you earn rewards for doing that, and you also get to participate in network governance, have a say. There isn't like a strict minimum, but practically maybe 0.01 SOL gets you started. You just need a compatible wallet, like Phantom is a popular one.
And when you stake, you mentioned becoming a delegator. What's the difference between me, the delegator, and a validator?
Good question. That's key. As a delegator, you choose a validator to essentially back with your SOL. Think of it like picking someone to represent you. The validator is the one actually doing the work, processing transactions, making blocks, voting on network proposals. Their votes are weighted by how much SOL is staked with them, so more stake, more voting power. Your choice as a delegator directly impacts who holds that power.
Interesting, like picking a representative. So what kind of returns are we talking about, and how often do those rewards actually land in your wallet?
The rewards are a percentage. It depends on a few things. How much you staked, obviously, but also Solana's current inflation rate, which is set to decrease over time, by the way. Also, the total amount of SOL staked network-wide matters. The rewards get paid out roughly every 2 days. That period is called an epoch. And besides the SOL, you get that governance participation, a real voice in the network's direction.
Sounds like there might be different ways to stake, though, especially regarding whether you can still, use your SOL.
Exactly. Two main ways, and it really comes down to liquidity. First is native staking. That's the sort of original method. Your SOL is locked up. You get rewards, you get governance, but you can't use that SOL for anything else unless you unstake it first. Then there's liquid staking. This lets you earn rewards but keep your SOL effectively liquid. How? Well, when you liquid stake, you get back a different token, a liquid staking token, or LST. Jettisol is a common example.
An LST, so like a receipt token you can use.
Pretty much. You can take that Jettisol or whatever LST you get and use it in Solana's DeFi world, lending it out, borrowing against it, all that stuff. So it offers way more flexibility. Native staking is maybe simpler if you're just starting, but liquid staking unlocks more possibilities.
Okay, practicalities. If someone's listening and thinking, all right, I want to try this, what are the steps? And importantly, what are the risks they need to be aware of?
It's pretty straightforward, actually. You pick a wallet, Phantom, Solflare, others exist. You get some SOL in there.
Yeah.
Then you decide, native or liquid. For native, you browse the validator list inside the wallet, choose one you like, decide how much SOL to delegate. For liquid, you'd probably use a liquid staking provider, maybe one integrated into the wallet like Jito. Select that, stake your SOL, get your LST back. Now, risks. Look, staking is generally seen as safer than, say, active trading. But it's not risk-free. Market volatility is, number one, the price of SOL can go up or down, obviously.
Right, the value of your staked asset itself.
Exactly. Then there's validator behavior. If your chosen validator messes up or acts maliciously, they can get slashed, meaning their rewards get penalized. That affects your rewards, though generally not your initial stake. Cyber threats are always out there. Securing your wallet is crucial. And, well, Solana has had network outages in the past, though it's been much more stable recently. So, bottom line, you need to assess your own comfort level with those risks. Like any investment, you could lose money.
And speaking of money, the inevitable question, especially for listeners in the U.S. taxes, how are Solana staking rewards treated?
Yeah, important one. In the U.S., generally staking rewards are taxable. You usually owe income tax on the fair market value of the SOL rewards when you receive them, or rather when you have control over them. Then later, if you sell or exchange that SOL for a profit, capital gains tax applies on the appreciation. So, yeah, keeping good records is pretty essential.
Okay, shifting gears a bit. Solana's history definitely includes some challenges, but looking at, say, the first half of 2025, the narrative seems much more about growth and stability. What does its recent network performance tell us?
It's actually quite compelling. The network achieved over 15 months of solid uptime since February 2024. That's its longest run without a major halt since it launched. And performance-wise, is consistently handling a huge volume, over 162 million transactions daily, even when things get really busy. And the fees, median fees, stay way under a penny, like ridiculously low.
Under a penny, even during peaks.
Yeah. There was this surge in activity January 2025 related to some meme coins or something. Solana's median fee was just 0.03178. Compare that to Ethereum. At the same time, Solana was over 1,500 times cheaper, and even 3.6 times cheaper than popular Ethereum layer 2s like Base, which are supposed to be cheap.
How does it manage that? Keep fees low even when busy?
It's largely down to something called the local fee market. Basically, congestion in one part of the network, say one really popular app, doesn't automatically jack up fees for everyone else across the whole network. Fees rise locally for that specific high-demand state, but the rest of the network stays cheap.
That's clever. But, okay, let's address the elephant in the room. Those past outages, they were significant. How does the current stability really stack up against those past problems? Can users feel confident those days are truly over?
It's a fair question. And vital for trust, right? Look, the 15-plus months of continuous uptime isn't just luck. It shows real improvements. They've been actively working on the core software, implementing upgrades. There's this thing called Firedancer, a whole new validator client built by Jump Crypto, designed to massively boost throughput and resilience. They've also refined how blocks are processed and prioritized. So while you can never say 100% guarantee for any complex system, the sustained performance strongly suggests lessons were learned, fixes were implemented, and the network is just fundamentally more robust now.
That provides important context. Okay, so the network's running smoothly, handling tons of transactions cheaply. What does that mean economically? How does this translate into actual value generated by the network?
Well, if you look at a metric called real economic value, or REV, basically, the total fees paid for network services, Solana has been consistently outperforming every other blockchain since around October 2024. In January 2025 alone, it generated over $550 million USD in REV. That was like 3.3 times more than Ethereum's REV in the same month.
Wow, 3 times Ethereum. Where is all that value coming from if the median fees are so low?
Great question. A huge chunk of it, actually somewhere between 40 and 66%, depending on the period, comes from something called Jito tips. These are optional, out-of-protocol payments users make directly to validators. Why? To get their transactions prioritized or ordered in a specific way. The fact that so much value comes from these tips shows two things. One, sophisticated users who understand how to optimize their transactions. And two, a really mature MEV, maximal extractable value infrastructure. People are willing to pay extra for specific execution guarantees. MEV.
Right, so sophisticated actors extracting value. Okay, so with the strong performance in economic activity, what's the outlook for the SOL token price itself?
Well, looking at technical analysis back in July 2025, SOL was showing bullish trends on longer time frames like weekly charts. You see some pretty optimistic user predictions out there, maybe $227 by 2030, even higher, like $290 in 10 years. Of course, predictions are just predictions. Its live price as of July 25 was around $178. Ultimately, like any asset, it's supply and demand, right? Influenced by network upgrades, adoption, regulations, real-world events. Your usual suspects.
Makes sense. Beyond price and transactions, what about the people building on Solana? How healthy is the developer ecosystem? That's often a key sign of long-term potential.
It's actually a really bright spot. In 2024, Solana apparently overtook Ethereum as the #1 place for new developers entering the Web3 space. They attracted something like 7,625 new devs, an 83% jump year over year. That's significant. And you see it in things like hackathons. Coliseum's breakout hackathon had over 1,400 submissions, supposedly the highest ever for any blockchain hackathon.
Over 1,400 projects, that's massive.
Yeah, it signals real interest. And then you have community efforts, like Super Team operating in like 19 plus countries, running big events, plus lots of boot camps, online courses like Blue Shift, the official Solana Foundation docs. It's this whole multi-pronged approach to not just attract developers, but actually onboard them and help them build. It seems to be working.
That developer growth is definitely compelling, and it seems like it's not just attracting indie devs anymore, but serious institutional players are taking notice. How is that shift actually playing out?
This is a really interesting trend. You have Franklin Templeton's CEO calling Solana one of the first institutionally focused chains. That's a big statement from traditional finance. The odds of a spot Solana ETF getting approved in 2025 were looking really high, like 91% on Polymarket prediction markets. The SEC was even pushing issuers to resubmit applications quickly, hinting at potential early approval. And the CME Group, a huge derivatives exchange, launched Solana futures back in March 2025. These aren't crypto-native companies. These are TradFi giants.
Okay, so they see it as a legitimate asset, but what are they actually doing on Solana itself? Are they building things, tokenizing assets?
Both, really. You've got major firms like BlackRock, Franklin Templeton, Van Eck launching tokenized versions of their money market funds on Solana. So bringing traditional assets on chain. You have companies like SOL Strategies focusing on corporate treasuries, holding and staking SOL directly. And there's even the Solana Policy Institute, the SPI, which is working on the regulatory side, trying to create frameworks like Project Open for compliant securities trading on the blockchain. It's about building bridges to the regulated world.
Blurring the lines, indeed. What about other kinds of real-world assets, RWAs? You hear that term a lot. Is Solana seeing much activity there beyond those big financial products?
Definitely. RWAs are a huge area. We're talking tokenizing everything from treasury bills to real estate to, well, more exotic things. Solana currently has over, I think, $351 million worth of various RWAs tokenized on its network across maybe 16 different asset types. And it's not just the household names. R3, a big enterprise blockchain company managing billions in RWAs on their private Corda network, chose Solana to help bridge their private system with public blockchains. They pointed to Solana's scalability and ecosystem.
Bridging private and public chains, interesting. Can you give us a couple of specific, maybe less obvious examples of these RWAs on Solana?
Sure. One fascinating one is Uranium Digital. They're tokenizing actual physical yellow cake uranium. Think about that market. It's usually super opaque private deals. They want to create a 247 institutional trading platform for it on Solana, making a critical energy commodity more accessible.
Tokenized uranium. Okay, that's definitely different. What else?
How about luxury spirits? There's a project called Baxis. They tokenize high-end whiskey bottles, for example, as NFTs. Each token tracks the bottle's provenance, guaranteeing authenticity. They're even using Helium's IoT network, which runs on Solana to monitor things like temperature and humidity for barrels and bottles in storage.
Wow, tracking whiskey barrels with IoT on the blockchain.
Right. And apparently their pay with crypto option exploded, up like 11,500% last year. Overseas buyers are up 50x. Solana has specific tools like token extensions and transfer hooks that let these projects build in compliance features, meeting regulatory needs while still using a public chain.
It really feels like Solana is becoming a magnet for these kinds of cutting-edge applications, especially ones linking the digital and physical. Let's talk DePIN, decentralized physical infrastructure networks. What's the story there?
DePIN is a really hot area, and Solana seems perfectly suited for it. The basic idea is using crypto incentives to get individuals to contribute physical resources. Could be storage space, bandwidth, sensor data, computing power. Solana's low fees and high speed are critical because these networks often involve tons of tiny transactions, micropayments for data, real-time verification. That's why major DePIN projects like Helium and Render Network actually moved to Solana from other chains. They explicitly cited scalability and cost.
Helium moving was big news. Can you tell us more about how they're doing on Solana?
It's been quite successful, it seems. Helium Mobile, their decentralized wireless service, saw huge growth, around 300,000 new subscribers just in Q1 2025. That's faster growth than major carriers. They even have roaming agreements, like with AT&T, where AT&T phones can automatically use Helium hotspots. It's like building a cell network from the ground up using crypto incentives. And their other network, the IoT one, has like 279,000 active hotspots globally, used for all sorts of things: flood monitoring in Portugal, tracking cattle health in Brazil.
That's pretty incredible reach. What about mapping? You mentioned that earlier, too.
Right. That's IveMapper. It's basically creating a decentralized Google Street View, but potentially much more up-to-date. Drivers install dash cams, contribute footage, and earn honey tokens. As of May 2025, they'd already mapped about a third of the world's road network, over 540 million kilometers. They did this with over 160,000 contributors. It's way faster and covers areas traditional mapping cars might miss.
Crowdsourced mapping, incentivized by crypto.
Okay, let's switch to another huge frontier: AI. How does Solana fit into the artificial intelligence picture?
Solana's focus seems to be less on, say, training massive foundational models itself, and more on facilitating what they call an agent-driven economy, making it easy for AI agents, like large language models, LLMs, to interact with the blockchain, to write Solana code, and to use decentralized AI tools. There are tools like dev.fun, where you can apparently type in a natural language prompt to just describe what you want an app to do, and it generates the Solana program for you. No coding needed. Over 20,000 apps built that way already. Generate code from a prompt that lowers the barrier significantly. Can you highlight some specific AI projects leveraging Solana?
Sure. There's Send AI, which is like an AI development lab focused on Solana. They ran a big hackathon, created something called the Solana Agent Kit to help AI agents connect to dozens of Solana protocols. Then Nosana. It's a decentralized marketplace for GPU power. If you're an AI developer needing heavy compute power, you can rent it from people sharing their GPUs on Nosana, often much cheaper than cloud providers, maybe up to 6x cheaper. They processed over 1.7 million jobs. And NoSFA Search. They're building Psyche, a decentralized network for training LLMs. They actually did the largest ever LLM pre-training run conducted purely over the internet using GPUs distributed globally, all coordinated via Solana. It's about decentralizing the actual AI infrastructure.
Decentralized compute, AI agents, powerful stuff. And what about mobile? Where does Solana fit into the push to bring crypto and Web3 to our phones?
Solana Labs has definitely put a strong emphasis on mobile. They developed the Solana Mobile Stack, or SMS. It's basically a toolkit for Android developers to build apps that deeply integrate with the Solana blockchain. And of course, they went a step further and built their own hardware, the Solana Saga smartphone, designed from the ground up for Web3 interactions. It's about making crypto feel native on mobile, not just accessed through a browser.
Okay, we've covered a lot of the growth and innovation, but no technology is perfect, and Solana certainly has had its share of criticisms and challenges. What are the big ones we need to understand? Those outages, for instance.
Yeah, you can't really talk about Solana without acknowledging the past outages. There was a big one, 17 hours back in September 2021. Other significant downtimes happened in May and October 2022 as well. These definitely shook confidence at the time and usually caused the SOL price to dip. And then there were security incidents. The big one was in August 2022, where around 9,200 wallets got drained, about $8 million stolen. That was eventually traced back to a vulnerability in a third-party wallet software called Slope Finance, not the core Solana protocol itself, but still impactful.
So Slope was an application issue, not Solana itself, but still concerning. Given those outages especially, what specific things has the Solana ecosystem done to address stability? You mentioned Firedancer, but what else?
Right. Besides Firedancer aiming for client diversity and performance, there's been a lot of work on the main Solana Labs client too. Things like stake-weighted quality of service, which prioritizes transactions based on stake, helping manage network load better. Also, improvements in how fees are handled during congestion, the local fee markets we talked about, are designed to prevent cascading failures. And honestly, the proof is in the pudding, right? That 15-plus month uptime streak really speaks volumes about the effectiveness of these combined efforts. It seems they focused heavily on resilience engineering.
Okay, that makes sense. What about the legal side? We've seen lawsuits and SEC scrutiny. Where does that stand, particularly this question of whether SOL is a security?
That's definitely a major ongoing issue. There was a class action lawsuit filed back in July 2022 claiming Solana Labs sold SOL as an unregistered security and misled investors. Then, more broadly, the SEC sued Coinbase in June 2023. And in that suit, they explicitly named SOL, among other tokens, as assets they believe qualify as securities. Now, the Solana Foundation strongly disputes this. They maintain SOL is not a security. It's a battle being fought legally and politically right now.
And what about the broader criticisms regarding potential for fraud on a fast, cheap chain?
Yeah, some critics argue that Solana's speed and low fees make it attractive for scams or rug pulls. But others, like Justin Bonds from Cyber Capital, push back on that. His argument is basically that this isn't unique to Solana. It's just a sign of popularity and activity.
Yeah.
He compares it to the scams Bitcoin saw in 2014 or all the ICO fraud on Ethereum back in 2017. Essentially, where there's high activity and new users, bad actors will show up. It highlights the need for better user education, security tools, maybe even AI-driven fraud detection across the ecosystem.
That leads to a crucial point. How does Solana actually govern itself? How are critical decisions made, especially with this emphasis on decentralization?
Solana's governance mainly happens through something called Solana Improvement Documents, or SIMDs. It uses an on-chain voting system where validators vote using SPL tokens. Those are Solana standard tokens like ERC20s on Ethereum. The weight of their vote depends on their active stake. But here's a key nuance. These on-chain votes are technically advisory. They show community sentiment. The real vote, in a way, is when validators actually decide whether or not to run the new software implementing the change. It's sort of a practical execution-based consensus.
Advisory votes. Interesting. So how has this worked out over the last few years? You mentioned participation is up, but what about those concerns around, say, delegators having limited direct input or the Solana Foundation's own voting power? How is Solana trying to make governance more decentralized in practice?
Yeah, it's definitely evolved. Early on, some significant changes happened without formal votes, but participation has climbed steadily. That SIMD 228 vote in March 2025 about changing the tokenomics had a record 74.3% turnout. And importantly, big exchanges like Coinbase and Kraken voted with their validator state for the first time, which was a big deal. But challenges remain. Delegators don't directly vote on SIMDs, they influence it by choosing validators. The discourse around votes like SIMD 228 got pretty heated, showing governance can be contentious. And yeah, the Solana Foundation delegation program controls about 10% of the staked SOL, which gives it significant weight. These are active discussions in the community, how to broaden participation, ensure diverse viewpoints are heard, and manage the influence of large stakeholders. There isn't a perfect answer yet, it's ongoing work.
How does Solana's approach, this sort of stake-weighted advisory system, compare to how other big blockchains handle governance, like Cosmos or Ethereum?
It's quite different. If you look at chains built with the Cosmos SDK, they often have a much more direct role for delegators. Stakers can sometimes even override their validators' vote on proposals. It's very transparent and aims for direct stakeholder control. Ethereum, on the other hand, is famously more off-chain focused. Decisions emerge through discussions among core developers, researchers, the community via Ethereum improvement proposals, EIPs. There's no formal on-chain stake-based voting for protocol changes. It relies heavily on social consensus. So Solana's kind of in between, trying to leverage stake weighting for efficiency while grappling with how to best incorporate broader community sentiment and avoid centralization pitfalls. Different trade-offs.
Okay, we've covered a huge amount of ground. So wrapping this up, what does this all mean for you, the listener, trying to make sense of this complex space? We've hit Solana's speed, the booming ecosystem, the serious institutional nod it's getting, tokenized uranium, whiskey, AI agents, mobile. It's a lot. But we also looked at the hurdles, the outages, the legal questions, the governance evolution.
Yeah, I think this deep dive really shows Solana isn't just a white paper promising things. It's a platform that's actually delivering results, handling massive scale, attracting real industries and serious money. Despite the challenges, it seems to be proving resilient and adaptable. It feels like it's genuinely at the center of a pretty significant shift in financial and digital infrastructure.
It really is a compelling story of resilience, pushing boundaries, and incredibly rapid innovation, and it's clearly still unfolding. So as you continue exploring this digital world, maybe something to think about is this. How might the success of a blockchain like Solana, this specific blend of high performance, a buzzing ecosystem, and that growing institutional embrace, how might that fundamentally change how you interact with digital money, financial services, or even just everyday tech in the coming years? Definitely something to mull over as we wrap up this deep dive.